Welcome. Today we're talking with Ted Brown. He is the co-founder and CEO of Digital Onboarding, Inc., a services software technology company helping credit unions to improve member activation of their financial services products. Ted, thank you and welcome to Credit Union Digest.
Hi, Larry. Thanks so much for having me.
Great. All right. Well, let's get started, Ted. As you know, member acquisition and retention is very important to credit unions. I understand that your approach is to build metrics to better link the actions and outcomes. Can you tell us about that?
Yeah, metrics is a big part of it. I'd say that's the first start. We really need to have greater visibility into this process as an industry. We can't just measure account opens, as I think a lot of us do. We measure the number of accounts we've opened last month, last year, last quarter, and call them members. They technically are called members, but under the surface, we have to really distinguish between what is the true membership, what's a true active relationship, and what is an account. So we really do advocate for moving the metrics downstream to really look for proxies for true banking relationships. Accounts being a leading indicator, an opportunity to either have a relationship or not. So that would be definitely a big part of the solution we offer, is providing that flashlight into this really critical stage of the relationship. So for example, if someone opens up a checking account, how many of those people are setting up direct deposits, using the card that's issued, generally speaking, having their money go into this account and money come out of that account, and that they're truly using this product that they've asked for. That would be a member to us. Account would be simply an opportunity or a leading indicator to potentially have a member. And the second part to the solution is not just visibility into the problem, it's how do we start solving that problem? How do we remove the friction points for members? And not just on checking accounts, but really any service or product that they ask for or can get from the credit union. How can we remove the friction and really move the needle on the numbers now that we have great visibility into these metrics? And that may be, for example, on setting up direct deposits, making it just as simple as a couple clicks for that user to sign into their company's HR portal. They know the username already, sign in, and we will do the hard lifting for you. We'll send the account number, you don't have to remember it. Instantly, your next paycheck will arrive. That's one small example of how we can really remove the friction that trip people up and increase the number of active members, not just have visibility into it and look at those metrics.
Great. It's a great distinction you're making between kind of having the product versus using the product. So that, I really like that, and that of course gets into the metrics and then the problem solving as you're just discussing. So thank you, Ted. So often credit unions have incentive programs for employees and members to support that member retention goal. Ted, from your perspective, how could these incentive programs be improved?
Well, I do think that visibility, as you mentioned in the last question, is the important start to this. As I say, if you can't see a problem, you can't solve a problem. Right. So once you have established that visibility and you truly know what are the proxies for retention, at a lot of institutions, we have good visibility into the top of the funnel, how many accounts are open, the very top. And then we have good visibility into the bottom of the funnel, how many people are leaving out the back door every year. And we don't have visibility in between. So I would say that those incentive programs can be improved with the start of visibility into what are the proxies that lead to retention or attrition. There are a lot of very good proxies for this, talking about checking accounts being a clear one and one that's really easy to understand. Again, it goes back to, is money coming in and out of this account, or has it been dormant? Have we not seen a paycheck for months? Have we not seen a card transaction for a long time? or did they never start? So 25 to 40% of checking accounts are closed within the very first year that they're opened. So having really good visibility into that and really focusing on the right times of the relationship to make sure things stick. We know by the numbers, if someone doesn't use that checking account within the first 90 days of opening it, they very likely will never use it. So incentivizing, particularly at the right points in time of the relationship, is critical to recognize these proxies for retention, address them at the right time. If we try to incentivize people to, go back and have accounts that have been there for 5 years to set up direct deposits, it's likely not going to help or work. We really need to incentivize and measure, okay, proximal actions to the initial request or the initial reaction by the member, the request for a checking account. Within 30 days, we need to incentivize people to make sure we're there to help the member use it within 30 days. So I would set those incentives, both to incentivize people on those key proxies that we know lead to long-term retention, and also have time horizons on them, because we know that timing is really important for this as well. Can't just be, a year down the road, we're trying to do this. It's got to be right away.
Right. Well, thank you, Ted. It sounds like your approach is, analytical, targeting, selective, timely, as you're saying, and that's all good. So as you were talking, I was thinking that implementation here could be daunting. What's involved in getting started?
Yes, we've done a lot of work within our platform to make it ready to go, easy to use for any kind of lean team. I don't know a single credit union out there that has people sitting on their hands waiting for work to do, particularly in areas like marketing and things like that. So the platform's only built for credit unions. So it's basically ready to go for a lot of the common use cases or objectives you have as a credit union. And we mentioned checking activation. It's a very popular one, but there's any host of engaging with single product auto loan holders, engaging with small business owners, engaging when you do mergers and acquisitions or digital conversions to move sets of members from one experience to the next. So for each of these very common use cases and objectives that a credit union would have, there's a starting point. You click through a little wizard, it gives you email reminders, text message reminders that you can start from, pages with these neat digital tools that I talked about removing friction, like the wizard to set up direct deposits or a wizard to put the card on file. And it's all branded out of the box for the institution as well. So all said and done, it usually takes about 1 to 3 months for a credit union to launch their very first campaign within the system. There is some one-time work that happens for that first launch and that first campaign, including some data file transfers. Because a lot of it's ready to go out of the gate, those subsequent campaigns usually are turned around in about 2 weeks. So with most credit unions using our system, again, they're seeing big change to their member experience within 1 to 3 months, and then continuing to use the platform for more and more, because it is quite a broad system, and there are inevitably many opportunities to increase member engagement in ways that lead to better success within the credit union's primary goals for the year.
Great. Well, thank you, Ted. The ready to go is got to be a big advantage for credit unions. Jumping into it and getting started. That really kind of takes the the proverbial writer's block out of it by having those ready to go. So that sounds like a great feature. So
it does, and I'll give you an example. About 45% of credit unions have no structured follow-up process whatsoever after an account's opened. You kind of just print out the welcome kit brochures, hand it to them in the branch, or send it in the mail. and then they never see them again. And part of that is because there wasn't previously something as simple to implement as what we've built.
Right.
So the burden to do something more automated or digital or engaging was just too high. And so we were stuck in the tactics of the past, mailers, manual phone calls. And that's why we found ourselves in a bit of the mess that we're in. But that's really what we've set out to solve with this platform.
Great, great. Well, thank you, Ted. I appreciate you sharing your approach to improving member and product activation. I can see how leveraging metrics can lead to better outcomes. So thank you.
Thank you, Larry. Appreciate it.
Great. So in closing, thank you for joining Credit Union Digest. If you have additional questions for Ted, please see the link in his bio.